San Francisco just went from doom loop to feeding frenzy. 2 years ago, headlines were screaming that the city was dying. Tech workers were fleeing. Office buildings were empty. Downtown felt like a ghost town. And then AI happened. Not as a buzzword, not as a trend piece, as a full economic detonation that restructured who has money, where they want to live, and how much they're willing to pay for it. Right now, in early 2026, San Francisco is the hottest housing market in the entire United States. Pending home sales jumped 17% year over year, the fastest growth among any major metro in the country. Homes are going into contract within days of listing. All-cash offers with zero contingencies. Even fixer-uppers are flying off the shelf. And the thing driving all of this is not interest rates. It's not the Fed. It's artificial intelligence and the wave of millionaires it's minting. Today we're breaking down exactly what's happening, what the data actually says, and whether this boom has legs or if we're watching another tech bubble about to burst. If you want data-driven analysis on housing markets before the mainstream media catches up, hit subscribe right now and turn on notifications so you never miss a drop. Let's start with the numbers because the numbers are wild. Median home prices in San Francisco hit $1.85 million, the highest level since June of 2022. Single-family homes are up 12.5% year over year. Rental prices are up 12%, the fastest rise of any major U.S. metro, with median one-bedroom asking rents hitting $3,090 in November of 2025. And at the ultra-high end, luxury homes in the San Francisco metro area posted a median sale price of $6.4 million between August and October of 2025. More homes sold above $20 million in San Francisco in 2025 than in any other year on record, according to Sotheby's International Realty. Let that land. Any other year. Ever. So, what's fueling this? The answer is concentrated and very specific. AI companies are not just growing in San Francisco, they are physically colonizing it. Anthropic is negotiating to take over entire downtown buildings. NVIDIA leased its first San Francisco office. OpenAI is headquartered in the city. In Q3 of 2025 alone, AI firms absorbed over 1 million square feet of office space. That is not a rounding error. That is a structural shift in who is showing up to work in this city every single day. And where people work, people want to live. Here's the mechanism that matters. These are not average workers getting average salaries. AI engineers and researchers at top firms are pulling in total compensation packages that routinely exceed $500,000 per year. Many received signing bonuses in the hundreds of thousands, stock grants that have already vested into real wealth. And now with OpenAI, Anthropic, and Databricks all predicted to go public in 2026, you are about to see a fresh wave of IPO liquidity hit the San Francisco real estate market. Buyers are not waiting. They are purchasing now before the IPO crowd shows up and bids everything 15% higher. The fear of being priced out is not irrational right now. It is the mathematically correct response to the supply and demand dynamic in play. And supply is the part of this story that does not get enough attention. San Francisco County was the only county in the entire Bay Area that did not record an annual increase in housing inventory last fall. There is what Compass called in their February 2026 market report an egregious shortage of inventory, with roughly 20% fewer listings than January of 2025. 1 in 4 active listings went into contract last month alone, an absorption rate 45% higher than the same period last year. When you combine explosive demand from newly wealthy AI workers with structurally constrained supply in a city surrounded by water on 3 sides and limited buildable land, the only direction prices can move is up. The neighborhood-level data tells an even sharper story. Pacific Heights and Cow Hollow hit all-time price highs in late 2025. The area now being called Cerebral Valley, centered around Hayes Valley, is seeing bidding wars driven by OpenAI employees with vested equity and large signing bonuses. Mission Bay and South Beach, sitting directly adjacent to the AI office cluster, are emerging as the prime condo investment zones for 2026. Meanwhile, neighborhoods like Noe Valley and Bernal Heights, which were popular in the previous tech boom because they offered proximity to South Bay commutes, are now benefiting because so much AI activity is concentrated in San Francisco proper. If you find this kind of granular market analysis useful, subscribe to Housing Intel right now. This channel exists for people who want to understand real estate the way investors think about it, not the way realtors sell it. Now let's talk about the bear case, because anyone telling you this market is a guaranteed one-way bet is not being straight with you. There are serious risks sitting underneath this boom that deserve honest examination. First, venture capitalists are actively warning of a major weeding out of AI startups in 2026. Not all of these companies survive. If the AI funding environment tightens sharply, or if the IPOs disappoint, the pipeline of wealthy buyers feeding this market could dry up faster than it appeared. Second, the condo market tells a more complicated story than single-family homes. Mid-tier condo prices actually dipped about 1%, and rising HOA fees are creating downward pressure in some buildings. The downtown condo recovery is real but uneven. Third, macroeconomic and political instability are wild cards. The same tariff uncertainty that derailed San Francisco's spring market in 2025 could return. Any shock to financial markets or the tech sector hits this city harder than almost anywhere else in the country, precisely because its economy is so concentrated in a single industry. The bifurcated market thesis is probably the most accurate frame for 2026. AI-driven sectors and luxury neighborhoods will continue expanding. Traditional industries and mid-tier properties will see more pressure and more uncertainty. This is not a rising tide lifting all boats. This is a very specific demographic with very specific compensation, bidding for a very limited inventory of properties in very specific neighborhoods. If you are not operating with that precision, you are not operating with good data. What does this mean for actual decisions? If you are a buyer looking at San Francisco right now, the window before the IPO wave lands is closing. Well-located turnkey properties near Mission Bay and the Caltrain corridor are drawing multiple offers already. The buildings that are still at 2018 pricing likely will not stay there. If you are looking for value plays, the next ring neighborhoods, Inner Sunset, Outer Richmond, Excelsior, offer a better price-to-proximity ratio and have room to run as the core continues overheating. If you are an investor watching from outside the market, the data center and commercial real estate story may offer a less crowded entry point into the broader AI real estate thesis than residential in San Francisco proper. And if you are simply trying to understand what the AI economy means for housing markets nationally, San Francisco is the leading indicator. What happens here in 2026 will be showing up in other tech-heavy metros in 2027 and 2028. San Francisco was written off completely, and now it is running at a pace that is outstripping every major metro in the country. The AI economy is not a vibe. It is salaries, equity, IPO proceeds, and return-to-office mandates turning into purchasing power that has to go somewhere. And in a city with egregious inventory shortages and a global brand that still attracts the world's most ambitious people, that purchasing power is going into real estate. Whether this ends in a sustainable new plateau or another spectacular correction is the question that will define the next 3 years of the San Francisco market story. If you want to be watching this story unfold with the data in hand and not 6 months behind, subscribe to Housing Intel right now. We are tracking the markets that move first, so you understand where the rest of the country is heading before it gets there. Hit subscribe, drop a comment below telling us what market you want us to cover next, and we will see you in the next video.